Yeah. Hi, friends. Let's continue that discussion. I thought of discussing, but whatever the reasons, this is a bit postponement. Fine. At least this is the time, no? Right? Whatever it is. Accounting Standard 15. Accounting Standard 15, we have already started. That is employee benefits. And in this employee benefits, we have completed already. Short-term employee benefits, we have completed. Correct. At the same time, retirement benefits also we have completed, and we got into the retirement, post employment benefits. Yeah, that is topic number 2. Okay, topic number 2 is nothing but post employment benefits. Let us quickly revise this. This is what important and which is left over in my discussion, earlier discussion. Yeah, post employment benefits. Yes, see, in this post employment benefits, right, generally students do feel like this is something different or difficult. Actually, it's not. Okay, right. If you just focus on this subject correctly, right, you will feel yourself very much comfortable. Okay, right. Chalo, yeah. So post-employment benefits. The post-employment benefits, like it is a continuation to the earlier class. So there, let me just give a quick revision. Right. So post-employment benefits. What is that? You are going to get the benefit after you leave. Correct, now. Right. Benefit will be received. Correct. Benefit will be received. Yeah. Benefit will be received. Yeah. After employment. Yes. After employment. Benefit will be received after employment. Sir, what are the examples? See, which what kind of benefit? Yeah, if you look at that, that is the first point I would like to say. That is the gratuity. Correct, na? Gratuity. Yes, gratuity. When do you get? Once you leave. But will you get? Everybody will get. Not everybody will get. Gratuity will come. Gratuity will come only when you complete continuously. Correct, na? Continuously 5 years of completed service if it is there. Completed years of service. Yeah, then only it is applicable to you. Then only you are entitled to get that. That's all. Not that's all. Even the provident fund, correct na? Yes, you will get provident fund. Only provident fund? No, not only provident fund. Even you will get pension. Yeah. So many other benefits are there. So provident fund, pension, all those things will come. When do you get this? Only after leaving the employment you are going to get it. Agree? Right. Chalo. So now gratuity, right? Let's focus on the gratuity, which is simpler. Okay. Right. And easy, actually, correctly speaking, easy. We will be able to complete it faster. Right. See, with respect to Provident Fund, what will happen? Just if you have some knowledge about it, right? What will happen with respect to Provident Fund? Generally, what will happen? Basic plus DA, correct? Now, basic plus DA. And on this, generally, people do compute like 12 percentage will be 12 percentage will calculate. Okay. So if you are the employer, let me take this as I'm employer. So I will calculate, say 1 lakh rupees is basic plus DA of particular person. So into 12 percentage, that is equal to 12,000 rupees. The 12,000 rupees, employer will contribute 12,000 rupees, and employer will deduct from the salary of the employee, and that amount will be correct. Now, this contribution, yeah, what will happen? This contribution will remit it to the department. Will remit to which department? Obviously, Provident Fund department को PF. Provident Fund department को will remit it. Month on month basis will remit it. That's all. Do you do anything else other than that? No, we don't do it. What Provident Fund department will do? Provident Fund department, right? That is government, obviously. They will promise. What do they promise? They will promise to whom? They will promise to employee. What do they promise, sir? They will promise to employee that I will give you 8% return on whatever you have deposited. 8% return. Okay, see, observe, try to understand, my dear friend. Yeah, here 8% return, whatever I am telling you, that is a promise between whom to whom? Provident Fund Department and the employee. Correct now. Right. Where will they correct? Whatever we have remitted, where will they invest? Where do they invest? Right. Where do they invest? Is it my problem? Is it my problem? Right. It is not my problem. Whose problem? That is Provident Department problem. Why Provident Department problem? Because Provident Fund Department only told that they will give you 8%. So what about employee responsibility? No responsibility with respect to employee. Right. What is my responsibility? The minute I contributed to department, my job is done. I hope you understood. The minute I contributed to department, my job is 100% done. I don't need to take care of anything else. Correct. So These plans, that's what the post-employment benefit plans are classified into two. Yeah, are classified into two categories. What are all the two categories, sir? Yeah, the first one is defined benefit plan. Okay, this is defined benefit plan. Yeah. So the next one is equal to defined contribution plan. Yeah, next one is defined contribution plan. Yes, defined contribution plan. Yeah. Now the question is what? Whatever the provident fund I am talking right now is nothing but defined contribution plan. What is it, my dear? It's nothing but defined contribution plan. This is nothing but provident fund. Why? With respect to the provident fund? Yes. With respect to provident fund, the company, correct, the employer, the company what it does not have? It does not have the actuarial risk. Correct. Now, what is the actuarial risk? Actuarial risk in the sense estimation risk. What is the estimation involved here? No estimation. Right. What is the estimation? Basic into 12%, that is equal to 12,000 rupees. Where is estimation here much? Not at all. So we don't have any actuarial risk or estimation risk. Nothing is there. And do I have investment risk? Why correct now? Why am I bother about investment? This has to be bothered by whom? Department should bother. Agree or not? Department should bother where to invest. How should I give 8% return on the amount contributed by the people? That is department headache. The company does not have. So my responsibility gets over immediately on contribution. Okay, that is with respect to defined contribution plan. And again, I already taught you in the last class, but anyhow, this is all related to post-employment benefits. I thought let me have a just quick revision. Okay, how do you account for this, sir? Okay, how do you account it? How do you account it in a sense? First thing, my dear, it is same as short-term employee benefit only. There are no differences at all. Okay, short-term employee benefits, may what do you do, sir? Yes, right. Accounting, when you do it, what about with respect to balance sheet? What about with respect to profit and loss? Yeah. So in the balance sheet, correct. If something is payable, yes, as on 31st March, correct. Now contribution will be made by 30th of April. 1 month gap they will give. Right. Within current. So that is going to be paid. So if it is payable, it is going to be current liability will present. No, sir, we already paid excess. Oh, you already paid excess. Not a problem. If it is paid excess, that is nothing but prepaid. Correct. Now, prepaid asset. You are going to recognize it as a prepaid asset. Next, whatever the contribution made to correct now, whatever the contribution made, generally it is going to be charged to profit and loss statement. It is going to be treated as an expenditure. Understand? This is going to be treated as what? Expenditure. Nothing else. Okay. But sometimes, as I told you already, yes, under some circumstances, sometimes it can be capitalized. Yes, it can be capitalized. When do you capitalize it? If it is permitted by other standard. Suppose there are some research is taking place. Fine, the scientists are participating in that. So the amount, whatever the provident fund contribution you are making to the scientist, correct, now on behalf of the scientist, that can be capitalized with development. I mean, intangible asset under development. Yes, yeah. And somebody is directly participating related to PPE installation. Yeah. If it is PP property plant, some big plant installation is taking some 1 year, 6 months, something like that. During that period, who are all the people participating? Their provident fund can be capitalized. That's all, my dear. This is with respect to defined contribution plan. Chalo. Let's go to now defined benefit plan. Let me explain it to you. Okay, defined benefit plan. Yeah, defined benefit plan. So what is the defined benefit? What is defined benefit plan, sir? Yeah. See, in case of defined benefit plan, right? See, example, I already told you example on the top, that is nothing but gratuity, right? Gratuity. How gratuity is different? Gratuity is different from the provident fund without them. What will happen in case of gratuity? Right. As per the Gratuity Act, if any employee works with me for 5 years continuously and he leaves, completion, 5 years completion. If he works for 5 years, after 5 years, we are supposed to pay as per the act. What are you supposed to say? What are you supposed to pay? That is nothing but last drawn salary. Yes, last drawn salary means when he's leaving at that point of time, what is his per month salary? Kitna? Okay, sir. Last drawn salary into 15 divided by 26. Okay. into completed years of number of years. Completed years of service. Number of years I wrote it, but I'm telling you very clearly it is completed years of service. Agree? Yes. So this is the amount you're supposed to calculate. Tell me, my dear. Tell me, tell me now. Okay, some employees have joined now. Okay, when did they join, sir? Sir, they joined on 1/4/2024. Correct. Okay. So I am assuming all these guys will be there for 5 years minimum. 5 years pakka will be there. After 5 years, after taking gratuity only, these guys will leave the place. That is my assumption. Nothing wrong in it. Okay. So if these guys are going to be there for 5 years, correct na? Now what are you supposed to do? Sir, is it payable today? It's not payable today. When are you supposed to pay? You're supposed to pay only after completion of 5 years. Correct. So say example, this is the 5 years period. Okay, now this is the 5 years period. When is the payment is happening? Payment is happening here. Correct. At the end of the 5th year or 6th year beginning, it is happening. Okay. 6th year. Yes, 6th year beginning, it is going to happen. Okay, excellent. Not a problem. But the problem is what, my dear? Right. When should I book the expenditure? Shall I book the expenditure at Y6 or during the 1, 2, 3, 4, 5? 1, 2, 3, 4, 5. Why, sir? 1, 2, 3, 4, 5. Are boss, employee has put in the benefit. Correct? He has put the effort. Year 1, year 2, year 3, year 4, year 5. He worked for the company for the first 5 years. Payment is happening at the end of the 6th year. So that means all these 5 years, what is happening? The accrual, correct? Na? Do we follow cash system or do you follow accrual system? Obviously cash system. When you say it is an accrual system, automatically you are supposed to accrue it. Employee has put the efforts. Correct. Sir, but how do you know, sir? 100 employees, 1,000 employees are there. Out of that, how many people will continue? How many people will leave? Correct, na? That is obviously a basic question for anybody. Right. Nothing to worry, my dear. So that's why what that we'll do it. It's not going to be done by a chartered accountant. It's going to be done by an actuary. So what this actuary will expect, see how many people are joining in the company in the past, sir, for 5 years or 10 years, something like that. Out of those number of employees, how many are leaving? I mean, he will have an estimation. So how many most probably will be able to take the benefit of gratuity? He will take into account. So many things he will take into account. Okay, na? So now this is going to be accrued. So that's why whatever correct. Now, first 1 year of service is completed. You're supposed to accrue the expenditure. Second year accrue, third year accrue, fourth year accrue, fifth year accrue. After 5th year, now 6th year beginning only he left. Now you make a payment. Correct. So now here, when I say accrual, on what basis? It is an estimation basis. Correct, na? It is estimation basis. Sometime before only I told you. What do you mean by estimation? I told you actuarial. Correct, na? Actuarial. So who is going to calculate this? We'll ask the actuary to calculate it. Okay, but isn't it estimation or not? 100%. Yeah, can it go wrong? It can go wrong. Who knows? Yeah, exactly. Everybody does estimation. Okay. Instead of a blind number, somebody does applies his statistics and calculates it. That's better than a blind number. Agree. So that's why it is an actuarial. So when there is an actuary is calculating, will there be risk? Risk means change in the value. That's all. Right. Whatever uncertainty is involved. I thought 10 people will leave, but maybe actually 12 people will leave. So for 10 people, I thought I will be paying 10 lakh rupees each person. But actually, it is not 10 lakh rupees. Something like more than 10 lakh rupees needs to be paid. You never know. Agree or not? Yes. So there is an actuarial risk is there. And at the same time, sometime what company will happen? See, 10,000 employees are there. Out of 10,000, 1 lakh employees are there. How many people will be keep on leaving in case of software company? Many other companies actually nowadays. People will be keep on living. So when these guys will leave, whenever they leave, if they completed for 5 years and they leave, you are supposed to make the payment of gratuity. Suddenly, a big chunk of people comes to me and asks for, sir, we are leaving, so give me my gratuity. Then are you supposed to make a big payment or not? You are supposed to make a big payment. If you don't plan for it, what will happen? Won't it affect your working capital? Yes, it affects obviously working capital. Issue will be there. That's why what people will do, people will make a gratuity trust. People will make a gratuity, okay, na? Yeah, gratuity trust. They will open one gratuity trust. And what do? They will deposit with the trust. Yeah, they deposit with the trust. What this trust will do with that money, sir? The trust is going to invest that. Yes, invest. That whatever the amount you are going to deposit, correct? They are going to invest. This is called, it is a one kind of asset. That is called plan assets. Plan assets, we'll call it. Okay, right. Trust, whatever it does, this is employee trust. Whatever they do, it is basically for the purpose of the employees only. Okay, nice, excellent. So the trust is going to invest. Invest into what? Invest into securities. Yes, there are some guidelines given in this regard. So trust is going to make the right investments. So they will get some returns also. Yes, trust is going to get returns. Yeah, obviously, when you purchase some shares or government bonds, debenture, I mean, dividends will come, interest will come, royalty will come, so many things. Royalty will not come. Okay, dividends, interest, and all normal capital gains will come. Correct, na? E returns. Right. So, what do I see? Suppose if I want, example, a common sense question. Correct, at Y5. At Y5, I am expecting 1,000 rupees is required. Yeah, you are today at Y0. In financial management, you must have learned. So do I need to deposit today also today 1,000 rupees, my dear? No, my dear. You should deposit something. Correct, X number you are supposed to deposit here. Is it going to grow? Correct. Now, obviously, some percentage everywhere, wherever you invest, even if you invest in government bonds also, some 5%, 6%, 7%, some percentage of return will come. Obviously, that means it is keep on growing every year on year. Pakka. So when it is growing, automatically it will be reached. Correct na? So when I say how much it will grow, I may be thinking 8% it will grow, but actually it may not grow by 8%. Correct na? So that means do you have investment risk in this? Yeah, it may grow, it may not grow. If it grows, fine. It may grow high also, it may grow low also. That means if it does not grow now, that does not grow, then company only has to contribute more amount of money. Yes, it has to contribute more amount of money. So that's why we have the company has investment risk. It is not like a provident fund where correct na where we'll just contribute it and my job is done. Correct na? No, you are only supposed to open a trust and they make investment. I mean, correct na, you deposit or contribute to the trust is going to deposit that, I mean, invest into different securities may perform good, may not perform good. So many problems are there. Agree, my dear? Yes. So that is the basic point, right? So now how are you supposed to do it? Right. So how do you do? Correct. Now that's why what are you supposed to? Right. There are correct. Now in this so far, whatever I have explained you? What is your basic understanding? The company has an actuarial risk, and the company has got investment risk. That. Then it is called defined benefit plan. Defined benefit plan. Correct. Now you don't know how much and exactly end of the day how much are you going to make a payment. Right. Here, what do I do? I'll calculate some things. Okay, we are going to calculate some things, but even though I calculate, right, it is whatever I'm telling you, calculation is only for one employee, my dear. Whatever I'm telling you, we are going to calculate for one employee. But but actually, practically, you're supposed to calculate for all the number of employees. You have to take a lot of assumptions, like how many number of guys will leave. So many things will be there. Yes, what level of growth, how is the industry, correct now, how is the health of the people also. Yes, actually, as per the gratuity act, there is one point. Suppose some employee worked for 3 years and he died. So now will that family eligible for the gratuity? Eligible for the gratuity. Okay, yeah. So there are some rules and regulations. You are supposed to read the law, but that is not that is actually for the time being it is out of syllabus for you. Don't need to read. Just follow the instructions. So what do we do? Generally, what do? We complete this entire discussion of calculations and etc. in 6 steps. Okay. What is the first step? First step and second step both are interlinked actually. Okay, right. What is that exactly, sir? Exactly, it's simple, my dear. So whatever the present value of obligation, I'll say present value of obligation. That is not obligation in the sense present value of provision for gratuity. Provision for gratuity. Yeah, present value calculation will. Okay, how are you going to do that? Correct, na? Yes. How are we going to do that? Just a second. I'll just open my Excel and start explaining you with journal entries and etc. Then and there. Just wait for few seconds. Just a minute. Yeah, I think you are able to see the screen now. Yes. See, there is one particular employee, so 1/4/2024, somebody is joining. Okay. Yeah, who is that guy? That guy's name is Mr. X. Okay, Mr. X is joining. And today, what is his salary? That is salary, whatever I am telling, that is applicable for the full year, actually, obviously. Correct, na? Sir, this guy per month salary, let me take it. Okay, no problem. Per month salary. How much is per month salary? 50,000 rupees, I am taking it. Okay, nice. 50,000 rupees is salary. Fine. So now what are we supposed to do here? Yeah. So 50,000 rupees is his salary. Excellent. So now how many years is going to continue? He's going to continue for 5 years. So that means he will leave the entity at the beginning of the correct, no, at the beginning of the sixth year. Assumption. You have to take at least a sixth year. That is my basic assumption. Okay. Is it going to be 50,000, 50,000 throughout his life? Obviously not. So there will be increase in the salary. How much is it increase in salary? Let me just take 10% is the increase in the salary. Correct. And what is the gratuity, my dear? Gratuity? Correct. Gratuity payable at Y5. Correct, not Y5. How much are you supposed to pay? The basic thing. First, I told last drawn salary. Correct, na last drawn salary. Yes, done. That's all a last drawn salary, na? No. That is 15 divided by 26 into number of years. Correct, number of completed years of service. So first, what is the last drawn salary? Last drawn salary. Yeah. So last done salary is equal to, this is going to be 50,000 rupees. Correct, na? 50,000. This is for which year? This is obviously for Y1. And what about Y2? Correct, na? Y2, Y3, Y4. Yes. What is it going to be? Agree? Yes. Ha. So, right. This into 110 percentage means you're increasing the percentage. Correct, na? Right. So same thing, I'll just apply it. All right. Right. At the end of the fifth year, what is the salary, my dear? 73,000 rupees is the salary. So chalo, let's go to calculation. Last done salary, that is 50 number, into 15 divided by 26 into 5 years, that is 5, I keep it. So how much are you supposed to pay, my dear? You are supposed to, this is the gratuity payable at the end of the fifth year. Can I say that? Correct. So now what are you supposed to do? Right. We have to accrue it in a over a period of time. So that method is called, PUCM method. What is PUCM, sir? That is projected unit unit credit method. Yeah, projected unit credit method is called. What do you do then? Per annum accrual. This 2,11,168 is supposed to be paid at the end of the fifth year. Are you supposed to accrue over a period of 5 years or not? You have to accrue. So per annum accrual. How much are you supposed to accrue? Obviously, 5 divided by 5, I'll do it. So divided by 5. So 42,233 is what's supposed to be accrued. Correct, na? Yeah. So let me take this Y1, Y2, Y3, Y4 here. Yes. So per annum. Yes, per annum accrual. You will pass a journal entry called. Correct, na? Yes. So this is the number. Done. So now this number. Right. We'll take this number. Yes. Yeah. Hmm. So what is your total, my dear? Total automatically, if I accrue for first year, second year, third year like that, it will come to, right? 1 second. Have I taken more? Yes, I've taken more. One extra I took. Yeah. So 2,11,168 will it occur? Correct. But actually, my dear, don't you try to just apply little bit of brain. Y1 is Y1 may 42,234. Correct. But is it going to be paid over after 5 years or not? Exactly. First, where are we, my dear? Where are we first of all? We are at Y1. Correct. Now we are at Y1, end of the first year. But payable after? Correct. Now payable when are you supposed to do? payable at Y5, isn't it? When I say it is payable at Y5, is a gap of 4 years. Correct. That's why what are you supposed to do? Since there is a lot of time, you are supposed to discount it. Sir, what rate of discounting? Which I already told you in the last one. That is Government of India. Okay, right. Let me write. Government of India bond yield rate. Yeah, bond yield rate. You're supposed to apply. Assume government of bond India rate is equal to 8%. Something I'm just taking it. So now tell me discounted value. Yes, discounted. Correct na? Discounted number of years I'll say. How many years of discounting are you supposed to do? You are at already end of the fifth year. Payment is going to happen at the end of the fifth year. So Y1 you are already there. So Y2, Y3, Y4, Y5. Correct. Now only 4 years you are supposed to discount it. I'll say 4 years. Here it's going to be 3. Here 2, 1. You're already at Y5. There is no number of years. It's going to be 0. So then what are you supposed to do? Present value of liability. Yes. What is the present value of liability? Yeah, E number into 1 divided by 1.08 to the power of 4, which you know, in basic calculations. Okay, right. So the same thing we are going to do it. Same thing we are going to do it. Yes. Right. So you are going to correct now. This is in present value terms, not future value terms. This above thing is a future value terms, isn't it, my dear? This is future. Yeah, this is future value. Correct, na? This is present value of liability exactly. So then what are we supposed to do? Yes, you are supposed to record the following journal entry. What are you supposed to record at the end of Y1 when I say at the end of the first year? Yes. At the end of the first year, what are you supposed to record? 31,043, isn't it? We are accruing for the current year services of employees. Do you agree? Exactly. So that's why we will write it as current service cost, current service cost account debit. How much is the current service cost? 31,000. Okay. Two what, sir? Two provision for, yes, provision for gratuity. Two provision for gratuity. Yes, gratuity. How much? Obviously, same number will. Correct? Yes. Same number will come. Done. Excellent. So this is same thing will you record? Yes, yes, we are going to record all the year. Same thing is going to be recorded. Okay, right. I'll record. But is it that's all? Not that's all. Listen carefully. First year. Just try to understand. First year ka liability provision, right? I have to make one small table called amortization table like that. I will make it. Amortization table. Yeah, what is this amortization table? Is it all relevant for my exam? Very much relevant. Okay, right. So what are you supposed to do? You are supposed to say opening balance. Correct now? Yes, that is nothing but interest also you are supposed to add it. Right. And further accrual, current year accrual will happen. Then it is going to be closing balance. Yes. So that this is going to be year. Yeah. Observe carefully. Year 1, 2, 3, 4, 5. Done. What is the opening balance of liability? Kuch nahi hai. Correct na? Opening balance of liability, there is nothing. We are supposed to correct na? We don't have any liability. Right. Is there any interest? When there is no opening balance, there cannot be interest. So that is also going to be 0 only. What is the current year accrual? My current year accrual is 31,000 rupees. Okay. Closing balance means what? Everything opening balance plus interest plus accrual. 31,043 is what the number. Correct na? This number is going to become closing balance, opening balance for the next year. Right. Next step. You are supposed to do at 8%. At what percentage you discounted? Same percentage will happen 2,483. And second year accrual is there? Yes, second year accrual is there. So this is the number it will. Okay. Right. I'm just copy pasting the formula. See this is going to be what? Third year accrual. Correct? Yeah. Next fourth year will be this is the accrual. Right. Fifth year will be this is the accrual. Correct. So now observe. Yes. Now observe. Yes. So have you come to 2,11,168, which we have got it here? Yes or no? Exactly. So now, sir, what all the journal entries record? See, I have recorded these journal entries already here. There is current service cost account debit to provision for gratuity. What is that you need to record further? Nothing but interest. Yeah. So what are you? What is the journal entry I should record, sir? Interest expense account debit. Interest expense is nothing but it will not go to finance cost. It will go to employee cost only, my dear. It's not separately under finance head. We will not show it. To what? To provision for gratuity. Provision for gratuity. Right. Provision for gratuity. It is nothing like right what I taught in India. I mean not India. What I taught it in the accounting standard 29. That is unwinding concept. Or in accounting standard 10 also I taught unwinding concept. This is exactly that unwinding concept. So every year what do you do? Yeah. This time it is zero. Correct? Na? Let me do it. I'll just do transport. Okay. Right. Formula. Okay. Okay. Not a problem. Mhm. Yeah. The same thing, it's going to be right. So the journal entries are supposed to be like this. So now year on year, you will be first year though only current service cost will be there, no interest will be there because you are recording the journal liability is created only at the end of the first year. Okay, so since the liability itself is created at the end of the first year, then where is the concept of interest on? So, but second year ka kya hota? Second year ka interest is always calculated. If you want to write, you write it like this. Yes, interest is always calculated. Interest is always calculated on opening balance. Okay, on opening balance. Exactly. Got it, my dear? Excellent. So this is the step number 1 and step number 2 we have completed. So the first entry is going to be current service cost to provision for gratuity. Second entry is going to be interest expense account debit to provision for gratuity. Right. So let me share. Yeah. Let me go to the next small concept. Sir, what is the step number 3? Step number 3 is nothing but plan assets, my dear. Okay, plan assets. Yeah, plan assets is nothing but when will the plan assets concept will come? Whenever your company contributes. Mhm. Whenever your company contributes to what? Contributes to a trust, a separate legal entity. A trust is what? A trust is a separate legal entity. Yes, separate legal entity. Yeah. So in the worst case also, in the worst case in the sense what? In the worst case scenario also. Yeah, what do you mean by worst case scenario, sir? Worst case scenario means, my dear, even if the company gets into liquidation, you understood my point? Even the company gets into liquidation, you cannot take out 1 rupee also from the gratuity trust. In the worst case scenario, in the worst case also, amount will not be given to company. Amount will not be given to company. Yes, amount will not be given to company. Okay. But what about the amount, whatever we have contributed, that amount will be utilized only to pay only to pay the gratuity amount of the employees. Okay, so it is used. Yeah, it is used. It is used only to pay. Yeah, only to pay what? Only to pay gratuity. Yeah, only to pay gratuity to employees. Understood? Yes, it is not going to be used for any other purpose. So that's why, correct na? Right. In the balance sheet, if I say in the balance sheet, yes, you have got a provision. Maybe year one number, year two, one number, year three, you have seen just now. Agreed? Right. So year one, year two, year three, that is something is there. Yeah. So, but the point is now, correct now. The point is, what whenever I contribute it, whenever I contribute, sir, shall I say plan asset something like that on the balance sheet asset side, right? So the answer is, my dear, no, you are not supposed to write it. Why should not write it? Arey boss, that is not a normal asset. Whichever the purpose I want, I can use it. Correct now? No, it can't be used it like that. It can be used for what purpose, sir? Yeah, correct now. It can be used for what purpose? It can be used only for the purpose of payment of gratuity. It cannot be used for any other purpose. That's why what are you supposed to do? Gratuity provision, correct na? Gratuity provision kaha pe hai? There only you are supposed to reduce the plan assets. Plan assets also supposed to be reduced. Suppose this is 100 rupees, 80 only I deposited. If you have deposited full amount, I don't have problem. Correct na? Kuch hai to it will come as a liability. Yes, net amount. What is this, my dear? This is the net presentation you are supposed to do it. You're not supposed to do asset is side, liability side like that. No, 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 you should not do it. You have to, because this is going to be utilized only for the purpose of, correct now, only for the purpose of gratuity payment. That's why it should be reduced from the gratuity provision. I hope you got it. That's why. And again, sir, this plan assets, how do you measure it, sir? Correct. Now, plan assets, as per the standard, it's very clear, my dear. It should be measured at fair market value. Fair market value on which date? On the balance sheet date. So it should be done at the market value. Okay, not a problem. Now, the question. Correct. Now, right, I will give you some journal entries. Just concentrate on the journal entry. It's going to be clear. Sir, my company contributed. Okay, now we have contributed amount to the trust. Yes, you have contributed amount to the trust. Then what is the journal entry you are going to record it, my dear? Not cash, I mean provision account debit to cash, right? If you say provision account debit to cash, no, you are not supposed to record it in this fashion. You have to cross it. No, it's not the correct thing. So then what is the correct thing, sir? Correct thing is equal to you have to record as a plan assets account debit to cash. Yes, you record a separate account or separate asset is supposed to be there. Okay. Sir, today I have deposited 100 rupees, 100 rupees I have deposited, sir. Okay, no problem. But the 100 rupees, when did you deposit? Sir, somewhere in 30th 6 we have deposited, sir. Okay, not a problem. Can it undergo a change? Yes, it undergoes. Will it grow or not? Yes, it will grow. Right. Here one small concept is there, my dear. You have to focus a lot. Okay, that concept, if you understand, then it's over. Okay, right. We are under which step now? Third step. But I will be linking third step and fourth step, actually. Right. I have to link it, otherwise you will not catch it. Now, whatever you have deposited, my dear, the number you have deposited, now let us say some 1,000 rupees you deposited. Excellent, sir. 1,000 rupees when you're depositing, will you be having an expectation that my fund will grow by this number? Pakka. Everybody will be having an expectation. My fund will grow by this number. Agree, na? Yes. So what is the expected rate of return? Yes. Expected rate of ROR. Okay, na? Expected rate of return. Sir, I am expecting it will grow by 8%. Not a problem. Okay, na? For what is the journal entry for expected rate of return? First, this is the expected rate of return. But is that whatever you expect that only will happen? It will never happen. Correct now. But actual return may be some extra amount, some it can be 10%, it can be 7%, it can be plus or minus. E difference is called actuarial gain or loss. E difference is called actuarial gain or loss. Point number one. The expected rate of return, what are you supposed to do? This should be adjusted. This should be adjusted with what, sir? This should be adjusted with interest. Interest cost. Interest cost. Where is interest cost, sir? Interest cost sometime in Excel, just now I showed you, na? Interest cost. Yes, it is going to be in the, I mean, you adjusted. Sir, what is that exactly? Let me explain you what is that. 8% I told, na? Okay, 1,000 into 8% is equal to, correct, na? 1,000 into 8% is equal to 80 rupees. Exactly. So with respect to expected rate of return, your journal entry number one here, with respect to step one, step two, whatever it is. So what are you supposed to do? Very simple. Expected rate of return is transferred to interest cost. Okay. Interest cost means what are you supposed to do? My property has gone up. I mean, my plan assets has gone up. So that's why what are you supposed to say? You are supposed to say plan assets account debit, that is equal to 80. Okay, na plan assets account debit, that is equal to 80, and to interest cost. Interest expense karke abhi with respect to liability, interest expense account debit to provision for gratuity you wrote na, that is supposed to be reduced. Yes. So if you had already interest of 120, something like that, 120 minus 80, that 40 amount only will be presented as employee cost. This is going to, I mean, this is a, what is this, my dear? Expected return. Okay. Sir, what about the actual return? Yeah. What is the actual return, sir, in this case? Yes, my dear. Actual return is what? Very simple. Right. Opening balance of plan assets. Sir, how much is the opening balance of plan assets? Sir, opening balance of plan assets is equal to 10,000 rupees. Okay, nice. What is the contribution you have done? Correct. Now, sir, we contributed 2,000 rupees in the current year. Correct. Suppose if there is no return, if no return, correct. Now, if there is no return, or otherwise we will say we made payment to employees. No problem. How much you made a payment? 1,000 rupees payment. Suppose if no return, what should be the balance, my dear? Balance is supposed to be 11,000 rupees. But Fair market value of the plan asset, fair market value of plan asset on 31st March. On 31st March is equal to 14,500 rupees. Possible, not possible? I mean, it's a plain fair market value of the plan assets is 14,500. That means, isn't it the real return, my dear? Isn't it that is equal to 3,500 rupees is the actual return? Correct, na? Actual return. Getting my point? Yes, sir. So now, are you supposed to account for? Yeah, you have to account for. See, in my example, 80, I wrote it here because I took it 1,000, 10,000, I'll take it, my dear. Whatever it is, 800, 800, some number, I will take it. Huh. So my expected return was 800 rupees will come, but actually return came 3,500 rupees came. Can it? Yes, it come. So what are you supposed to do? So now 3,500 is actual return. Expected is equal to 800. That is equal to 2,700 is what? Actuarial gain or loss. Sir, actual gain or loss को क्या करना? कुछ नहीं करना. You are supposed to transfer it immediately. You cannot bifurcate. You cannot defer it. Transfer to P and L. You are supposed to transfer to P and L immediately. Yes. You have to transfer it to P and L immediately. Hmm. Yes, that is what we will do it in this regard. So then what should I do for 2,700? Yes. What are you supposed to do? It's a gain for you, na? So that's why plan asset has gone up. So plan assets account debit, that is equal to 2,700 to actuarial gain bracket mein profit and loss, that is equal to 2,700. So now your value of the closing value of the assets have come to 14,500 rupees or not? Exactly. It has come to 14,500. Next, that's all. This is step number 3. Okay, come to step number 4. Step number 4, what I will speak generally, that is actuarial gain or loss I will speak. Okay, actuarial gain or loss, which I will generally talk. Actual gain or loss, just now I spoke on the top. Correct. But actually, actual gain or loss will arise, correct? Na? It will arise from where? It will arise from two things actually. What are the two things? It is arises from the plan assets as well. It will arise from the present value of obligation. It will come from the obligation. Means provision se bhi aa sakta. Right. That is, I will say provision. Yeah. From both the sides. So plan assets, what is that I told you? Right. I'm just writing it. It is discussed above. Yeah, it is discussed above. Yes, we have already discussed it on the top. But sir, obligation से भी हो सकता क्या? Why not? Obligation से भी हो सकता. How sir? How will it come? How will it come means very simple. Right. See, expected growth. Yeah, simple thing I am saying. Expected growth. Expected growth in the salary. Expected growth in the salary by the actuary. He is expecting 10% will grow. But maybe in the current year growth. Correct now. What is the current year growth? Current year growth is equal to 11% is actually there. Correct now. Isn't it estimation change for him? Correct now. Actually, that's why 1%. The impact. He will calculate the impact of 1% in this case. 1% will be transferred to yes, present value of obligation only. Correct now. Again, employee actual gain or loss account, debit or credit. Corresponding debit or credit will be given to the provision for gratuity को दे देंगे. Okay. Yes. So here also I will say actuarial gain or loss, whatever it is. It may be either sometimes gain आया तो credit करेगा, loss आया तो debit करेगा. That is all basic things. Okay. So two provision for correct na, two provision for gratuity. Yeah, two provision for gratuity. Yes. So profit and loss, I mean actual gain or loss can come from the plan assets also. Actual gain or loss can come from the obligation also. It can come from both ends. But end of the day, put together, it's going to be transferred to profit and loss immediately. It is not going to be deferred at any cost. Okay. Right. Now let us go to step number 5. Step number 5 is simple thing. Past employee benefit, past service cost. Okay, let me close it like this. Past service cost. Okay, just simple small point is there. Okay, past service cost, not very small. Okay, some point is there. Yeah, what is past service cost, sir? Listen carefully. Right. So far, say example, assistant manager, correct? Now, assistant manager. Otherwise, forget about assistant manager. Yeah, I'll tell you, guys, whoever have worked for 5 years. Okay, the company is giving some medical benefits. What is it giving? Some medical benefits are given by the company. Excellent. Not a problem. When I say medical benefits are given for whom? 5 years. This is what originally, I mean, planned by the company. Yes. Announced by the company. Right. So for this 5 years ke liye something. Okay. Otherwise, instead of 5 years, this is one cadre. Instead of 5 years, I'll take it as instead of one cadre of people. Okay. You should be like say manager level. Then only it will be applicable to you. Karke bola. Okay. Not a problem. But today, I mean, with respect to this, we already correct now. We made provision. Yes, we made whatever we spoke so far. That is all perfectly done by us. Correct? Excellent. But now the question is, what is the question coming? My dear. Now this is manager karke bola. But subsequently, after 3 years, we told even assistant managers, correct? Now whoever worked for 3 years and above, yes, for them also this benefit is medical benefit are going to be given करके बोल दिया, right? So now if you see the group of assistant managers, say example there are 10 assistant managers are there. Out of them right now, out of them, let's say example 4 employees, how many years they worked for 4 years or above, they have worked out more than 3 years they worked. And what about the 6 employees? These 6 employees, they worked for 2 years, they have worked. Correct now, they worked for already the date of announcement. If you look at some employees already eligible, that means are these guys already eligible or not? Yes, they are already eligible. What do we call, eligible means we say vested karke bole. Yeah, they are ready. Correct now, next day only they, once you announce it na, next day only they will come to your manager and say, sir, I am eligible, sir. So tell me where are we supposed to sign to get the benefits out of it? Yeah, obviously they will ask you all those things. Excellent, sir. Correct? Huh. So now what are you supposed to do? Right? Tell me, they are eligible today. Agree. When did they work? In the current year or last year, sir? Last year's. Correct. Have you recorded any journal entry in the last year? No. Correct. Na? So service is done by them in which year? In the last year. Service is done by them in the last year. They have not worked in the current year. This is the liability arising because of their past service, not because of the current service. That's why what are you supposed to do? Right? How we wrote current service cost, same way, past service cost. Okay, na? Past service cost account debit to provision. Yes, you are supposed to make the provision immediately. Got it? Done. Sir, but what about these guys, sir? So example, instead of 2 years, I'll just make a small change. I'll say some guys, these 6 guys have completed only 1 year of service, not more than that. Not a problem. Correct, na? Right. But now you are in the which year? You are in the second year. Yeah. So is it vested? No, it is not vested. It is unvested. Not yet vested. Correct. Now what the standard is saying? What is the amount that comes to 1 year service cost? Sir, 1 year service cost ko 1,000 rupees. Some number I'm taking it. What you should do, anyhow, another 2 more years, these guys have to work, no? Yes, sir. 2 more years, they have to work. So, 1,000 rupees related to first year, you please allocate it. What are you supposed to do, my dear? You are supposed to allocate it. Allocate it in the remaining period. Remaining period means Y2 may charge karo. I mean, Y2 may you will be charging 500, Y3 may also you will be charging 500. In addition to Y2 current service cost, Y2 may whatever they work, that is going to be that time service cost. But Y1 ka service cost, Y1 is already done for them. We didn't pass journal entry because that time that plan was not there. Agree. So that 500 you are supposed to, I mean, the 1,000 rupees of liability with related to Y1 is supposed to be bifurcated between Y2 and Y3. That's all. That is what you are supposed to do it. Okay, right. So Y2 may what is the journal entry will come, sir? There will be two journal entries, my dear. What two, sir? Yes, sir, two, sir. Past service cost account debit. PSE means not preference share capital. Okay, na? Yeah, past service cost account debit to provision 500 rupees, 500 rupees. Y3 may also 500 rupees, 500 rupees will come. Next, current service cost also will come. Yes, current service cost क्यों? Second year काम कर रहा है ना? Yes. Second year में already plan is announced by the management or not? Yes. So then yes, like first year whatever the 1,000 rupees or whatever number comes, a number 1,000 rupees, 1,000 rupees. So by end of the day, by end of the third year, 3,000 rupees is already accumulated. Correct. Then we will give the medical services to the employees. That is the past service cost concept. Okay, right. And the last step, that is sixth step. Sixth step, if there is any closure, correct? Na? Any closure. E closure may be sometime what happens. Voluntary, voluntary in the sense, yeah, sometimes I'll say settlement or okay, settlement or without settlement, I'll tell you. Yeah, sometimes what we'll do, settle it. Settlement. When I use the word settlement, no, that means we'll make a payment. Yeah, we'll make a payment. Yeah, there is one more word called curtailment. Yeah, curtailment. Curtailment means what, sir? Curtailment is nothing but a closure without any payment. Closure without any payment. Sir, how will it happen? Yes, my dear, it will happen very much. Okay, sir. Assume there is a factory is there. Okay. ये factory का, where is your factory? Sir, my factory is in Odisha, sir. Excellent, sir. So, but Odisha का factory का कितना साल हो गया, sir? Yeah, so far 4 years are completed already. Yeah. See, guys, factory life itself is 4 years done. Now, due to some environmental issues, now this factory is getting closed. Yeah, it is getting closed. So now tell me, all the employees will be losing the job? Yes. Will they be right? All the employees will be losing the job? Yes. For last 4 years, have you accrued all the things? Yes, we have accrued the liability that current service cost, interest cost, ये वो पूरा accrue कर दिया. But is there anybody eligible to get the payment? No. Why? You joined company life 4 years. Then how come you worked for more than 5 years? Obviously not possible. Since not possible, you are not going to make a payment, but it's going to be closed. So what should I do now, sir? What should I do means provision is no more required. Correct? Now provision is no more required. Provision account debit that should hit my profit and loss. Whatever the thing you have accrued, entirely it should be transferred to profit and loss statement. Agree? Right. And settlement means what? Settlement means we'll make a payment. Yeah, whatever is paid, anything excess less is there that will be transferred to profit and loss statement. Correct, ma'am. So payment means what will happen? Provision account debit to cash. Yeah, suppose excess I paid, that will be transferred to P&L. Or loss, less I paid, more I paid, that will be transferred to E number. But here, one important point is there. What is that important point? Same idea. 15th of July 2024, we are closing the factory or something. Okay, situation is happening. Today, what are you supposed to do? Correct. Now, what are you supposed to do? First, to provision as per the books. You note it. Provision as per books. So far, there must be something. No provision. Yeah, 1,000 rupees is there, sir. Okay. This is for how many employees? This is for 1,000 employees. Yeah, out of 1,000 employees, if factory wala is equal to 200 employees are there. Now you go and get the actuarial valuation. You are supposed to go and get the actuarial valuation for how many employees? Go and get the actual valuation for 800 employees to go and get it. Who are all 800 guys? Yeah, these guys are with me. They are not leaving the company because these guys are related to some other factory. Some other factory, my factory, not related to Odisha factory, some other factory where there is no problem like this. Okay. Now you go and get the actual valuation, separate valuation for the 800 guys. Okay. Today, which date you are closing? No, that date you should go and get it. Sorry, sir, we'll get it. How much has that come? Sir, that has come to 750 rupees. So 250 rupees is nothing but a gain. Correct. Now that should be transferred to profit and loss statement. Okay. So are you already your provision has 1,000? Are you supposed to reduce it to 750? Correct. That's why we will say provision account debit 250 rupees. Sir, I paid some money. कुछ पे किया तो लिखो. Correct na? No, sir, I paid less, I paid more. Yes, that balance will go. This is the balancing figure which should go to profit and loss. No, sir, I paid more than 250 pay kiya. Not a problem. If this either P&L will be debited or credited, this is how you're going to record it. The important point here should be noted by all of you. Whenever you are making a settlement or whenever you are doing the curtailment, on the date of curtailment or on the date of settlement, you are supposed to go and get a fresh actuarial report for the remaining guys who are going to continue with the employee. Then already what is there in the books provision? What should be there for the remaining employees? That much we will keep it here. The remaining amount is supposed to be reversed. Right. Our remaining amount, if you are making a payment, okay, to cash. right? No, I'm paying lesser money, I'm paying more money, I'm paying no money, correct? And then balance amount is going to be transferred to profit and loss statement. Okay, guys, this is about your defined benefit employee benefits. Okay, right. If you like this video and if you feel it is useful, why can't you share it, my dear? Correct. Now, how I am sharing my knowledge, at least you share the information. Like there is one Ravi Kanth, somebody is explaining you like this. I liked it. Just see you. It may be helpful to you, other party, and try to like it and try to comment. Yes, at least thank you. Correct me. Right. Nothing else. Right. And forward it to your friends. Thank you. Thank you. All the very best.